What's poppin', investors? Um, sorry, this is like the third time I've done this intro. I'm just done. Okay, I'm just keeping this. I'm gonna do a little bit of an offshore overhaul video, overview video this time around. I did some videos on Borr drilling, did some videos on Valaris. So it's time to kind of take a look at the sector overall. I found some information that's not new to you if you are a veteran of the sector, but if you're a generalist like me and you're just looking for new cool things to help you analyze companies and develop a little bit of a big picture view, there's a company or a website called Westwood Global Energy Group, and you can check out the exact rig figures globally at any given moment. Look at this. You can click here by year, by month. Okay, you can go to 2024, check out what the change was in December and in November and whatever. You can go back to today and see what the rig count is. To give you the conclusion, basically the rig count has been decreasing a little bit since last year. The utilization rate was a bit lower than the previous, and the rig count maybe reduced like 2 to 5% or something like that. But it's not a meaningful decrease. To put things into perspective, the rig count globally was maybe 25% lower in 2021. So there's been a lot of new rigs that have hit the market and have been out there increasing the supply, which necessarily, is going to flatten out or push down the price. However, I found this article that is written by an expert covering the industry since 2006, not me, a generalist who has been covering the industry for today. And in the article, many things are described. I found this chart particularly informative, where it lists the utilization of the industry per year. The gray line up top, that's the market supply. That's how many rigs are out there. The black line, the black bars or the dark bars, are contracted rigs, and the little striped area is forecasted demand. So market committed utilization is the orange number. You can see the graph. There's a soft spot in 2025, and there's a lot of forecasted demand that hasn't materialized yet, hasn't been contracted yet. The article writer points out that 2025 is going to be a soft patch or a soft area, but not necessarily a new downtrend. In their opinion, many of the projects have been postponed to 2026, 2027, but they haven't actually been canceled. Whether there will be cancellations or not, it's still up in the air, and a lot of these projects might be dead in the water. I'm trying to sprinkle in some offshore drilling puns. I don't know. Anyway, what I wanted to say about this is the very interesting detail I found is that, in her opinion, the pricing of the rigs will not drop that dramatically in 2025. Even though the utilization is going to be low, you would think that would lead to lower prices and people making concessions. In her opinion, they won't, because there's going to be inflationary pressures, apparently, right, that will keep the prices elevated. The low prices of yesteryear are not coming back, is what the point is. So there, as far as the rig count goes, there's going to be, about 30, 32, 34 rigs coming in online in the next few years. But in my opinion, many more will be retired. So the rig count, I believe, will continue to decline. It's actually been in a structural decline. I researched some numbers thanks to our AI bots, but I also Googled things, okay? And it looks like, from what I gather, from the imperfect information that I've got, is that the rig count supply has been actually decreasing since 1997 to 2000. And it's pretty dramatic, maybe like 5% a year or something like that on average. Is reduced quite, well, not on average, but 2 to 2 to 3% or something like that, because it's basically halved since then. It now comprises about 13% of total rigs worldwide, compared to 70, whatever the number is, 87% for on land rigs. That ratio used to be about 80-20 back in 2000. So it gives you a little bit of perspective. That ratio jumped to 19% in 2020 because of the pandemic, etc. But ever since then, everything's kind of normalized and the reduction has declined. I mean, the reduction of rigs has continued, which gives you a little bit of a window inside the industry. Everybody is under pressure and has been for 20 years now in order to consolidate, right? Or to merge with each other in order to collect a smaller and smaller part of a shrinking pie. So it's really tough. It's really tough. But there is going to be moments where they're able to bring some premium into their businesses and flourish for short periods of times. I don't know how profitable that would be, but it gives me information as a generalist that this has to be just a trade. We can't, if this trend continues, we can't be holding these companies for 10, 15, 20 years. And just that's the reality of it. Some people will survive, many won't. We don't know what the future brings. Maybe this trend will reverse. But until this trend of shrinking offshore rigs ends, we are not going to be able to hold these companies for a long time. So I'm looking for a trade. My hope is that by 2026, or at least late this year, the market realizes the actual value of the underlying companies, who have many of them hit a 60-70% correction since recent highs, and things will snap back and reverse a little bit and find the mean. But it's a bit of a gamble, right? It's a big risk to do that. We don't know how long this recessionary situation is going to last that we're in right now. I don't know what the oil demand is going to look like. There is still lots of supply out there in the market when it comes to oil. Gas is catching a bit of a bid, but oil is still plentiful apparently. There are many theories. I've been listening to some experts about whether or not OPEC's capacity is what they say it is, etc. But the reality is we're producing more oil globally than consuming at the moment, and that obviously can't be good for pricing. If the oil price is low, it's really hard to hire an offshore rig, right? That just makes sense. It's very expensive to operate. It's got lots of risks. You're running reputational risk as an oil company, so you have to pay a premium for that. So it's got to really be worth it. It's got to really be worth it. And that's why you're seeing things like higher specification rigs being charted out instead of just any kind of good deal, because it has to really put a dent in the top line or in the production line, in the production numbers of these oil companies in order for them to actually shell out the money. Another oil pun. I don't know if you caught that. So that's my overview of the industry. I believe this expert, I think, is going to be a temporary soft patch with a bit of a resurgence in the next year or two. However, I'm going to be looking to exit as soon as I make two or three times the money that I've invested. If that ever happens, I'm out. I'm going to look for a good opportunity to sell some calls and maybe just sell outright. So that's the play for me particularly. I'm interested in your opinion. What do you think is going to happen? Is this a trade for you? Is this a lifelong hold? Are the offshore companies attractive at the moment? What is your opinion? Let me know down below. All right, and I will dig into them. I don't know. I'm done.